2025, China made a move that sent shockwaves through the global silver market. Without warning, Beijing placed silver under state-controlled export approvals. In simple terms, China told the world, "We control the silver now." Analysts immediately warned of shortages. Industrial manufacturers panicked, and silver prices began climbing. China wasn't just tightening policy. They were treating silver the same way they treat rare earth metals, a strategic resource that can be turned on or off at will. The message was clear. China was prioritizing domestic demand, and that demand is massive. China produces over 80% of the world's solar panels, and each panel requires silver paste for its electrical contacts. With record solar installations planned for 2025, most experts assumed China would hoard every ounce. But then something happened, something nobody expected. Just 9 months later, in October 2025, China did the unthinkable. They exported 660 metric tons of silver in a single month, the largest export volume in history, and they sent it straight to London, the very market they were supposedly cutting off. This wasn't a gradual policy shift. This wasn't easing restrictions. This was an emergency dump, and it failed. Because despite flooding the market with 660 tons of silver, prices didn't crash. They didn't even slow down. Instead, silver surged. By December 2025, silver hit $66 per ounce, the highest price in history. So the question is obvious. Why did China reverse course so dramatically? And why didn't the biggest silver dump ever work? To understand that, we have to go back to what China didn't tell the world. Because the export controls weren't about strength, they were about shortage. Behind the scenes, China's silver inventories were collapsing. Data from the Shanghai Futures Exchange shows that visible silver stockpiles fell from over 3,900 tons in 2021 to just around 780 tons by December 2025. That's a 75% wipeout in less than 5 years. China wasn't restricting exports to build reserves. They were restricting exports because they were running out. And when London's market began to seize up in October 2025, Beijing had no choice. They opened the vaults. Here's what happened behind closed doors. The London silver market, the largest physical silver hub in the world, entered what traders call a physical squeeze. Inventories were so tight that buyers were paying massive premiums just to get metal delivered. London was screaming for silver, and the prices they were offering were too high to ignore. Earlier in 2025, silver in Shanghai was already trading at a 15% premium over Western prices. That premium covered China's import taxes and then some. Chinese traders were already incentivized to import silver, not export it. But in October, London offered even higher premiums. At that point, exporting silver wasn't optional. It was necessary to prevent the global pricing system from breaking down. China became the supplier of last resort. They shipped 660 tons to London to keep the market functioning. But here's the key detail most analysts missed. This wasn't a strategic move. It was damage control. And it didn't work. Because even after dumping more than 21 million ounces into the market, silver prices kept rising. By late November, silver crossed $52 per ounce. By mid-December, it hit a new all-time high. That tells us everything we need to know. The supply-demand imbalance is far worse than anyone wants to admit. Industrial demand from solar, electric vehicles, and data centers so strong that even China's emergency stockpile release couldn't satisfy it. Let's look at the math. China produces about 3,300 tons of silver per year, but China consumes nearly 19,000 tons per year. That's a deficit of 15,700 tons annually. That gap can only be filled through imports or inventory drawdowns. And in October 2025, we watched China burn 660 tons in 1 month just to keep London alive. This isn't a cycle, it's a death spiral, and the stages are already clear. First, China imports heavily. Then domestic solar demand eats through stockpiles. Shanghai inventories collapse. London faces a physical squeeze. China exports emergency supply. Prices rise anyway. That's not stabilization, that's failure, and the global picture is even worse. According to the Silver Institute, the world has been running silver deficits for more than 5 consecutive years. In 2024 alone, the global deficit exceeded 215 million ounces. Mine supply is stagnating. Demand keeps rising. Solar installations are up. EV adoption is accelerating. AI data centers are exploding. Silver is not optional for these technologies. You cannot substitute it. Silver has the highest electrical conductivity of any metal, the highest thermal conductivity, and critical antimicrobial properties. Physics doesn't negotiate. You can't replace silver in solar panels without losing efficiency. You can't replace it in high-frequency electronics without failure. And in medical applications, substitution can be deadly. That's why China's 660-ton dump didn't stop the rally. Demand is non-negotiable. Now add India to the equation. In September and October 2025, India imported over 2,600 tons of silver in just 2 months. Much of that metal came through London and Hong Kong, traditional routing points for Chinese silver. India's economy is growing fast, solar installations are booming, and Indian investors prefer physical silver over depreciating currency. So when India demanded metal, someone had to supply it. And once again, that someone was China, bleeding what little inventory remained to keep the global system from collapsing. But here's the terrifying reality. You can only do that once, maybe twice. After that, the math takes over. Let's do the calculation no one wants to face. Shanghai's visible silver stockpile, around 780 tons. China's monthly consumption, over 1,500 tons. That's less than 2 weeks of supply and visible inventory. Yes, China likely has off-exchange reserves, but even if those reserves are large, the trend is undeniable. They are burning through silver faster than the world can replace it. Silver isn't running out tomorrow, but the clock is ticking, and when the system finally breaks, it won't ask for permission. If you want to stay ahead of the next global supply shock, understand real market mechanics, and know what mainstream media won't tell you, subscribe now. Because when the math finally wins, you don't want to be the last one to realize it.